Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 30th of March, comes to you from London. And markets recovering quite a bit on the Russia-Ukraine situation, the talks, people getting quite excited about the fact that there might be a solution. But of course, the war still goes on in Ukraine. I'm wearing my flower, turned my heating off, wearing some warmth, and I asked myself what's changed. And from a chart perspective, not a great deal. So we'll start by looking at the dollar index, remembering this is my weekly, daily and 60-minute cloud charts. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish, and the corresponding point and figure charts. So we are short-term bearish on the dollar. It's had big falls yesterday, and that's just a realignment on the sort of market getting excited about a potential solution to the war. But the reality is the long-term trends are unchanged. The euro is actually back above that 110 level on that weaker dollar, jumped yesterday, so that's looking short-term better. But the reality is, again, the euro is looking weak. Against the dollar yen chart, we're seeing here still above 120. That big move is a signal really that we will see renewed dollar strength, and this upside target was activated. Sterling sitting at 131, and that's also just strengthen a little bit on that stronger dollar, but still below the cloud. And against the euro, the sterling has weakened quite significantly, so the euro has the upper hand here at the moment. Looking at Bitcoin, sitting at $47,500, really looks very clearly now like we've found support on that cloud base on the weekly. We're back through on the daily into bullish territory, so we're bullish on all three time frames for Bitcoin. $83,000 is the long-term target. A new target here on the medium-term chart to 52,000, so that's where we're looking to at the moment. So cryptocurrency is looking better. Looking at the S&P 500 index, we see here that we did have a good, strong showing yesterday. Not enough to pull us back above the cloud on the lagging line, though. So we are still bearish on this chart. And these downside targets still do hang over us. We have to make new highs to deactivate those downside targets. Looking at the futures today, it looks like the markets will open a bit lower. So the S&P 500 index down 1/3%, the NASDAQ down 0.43%. So again, we'll see a lower market opening there by the looks of things in the US. And the VIX volatility is sitting at 19.6. So back into below the 20s. The fear index is less fearful, and we see over the last several days we've just seen a gradual improvement in the fear factor. Remembering that the general trend here is still one of higher lows and higher highs, which is an uptrend. So it's not done yet. The FTSE future is flat this morning. The DAX in Germany had a strong recovery yesterday. It's back down 1.3%. Remembering this 15,000 floor is really significant on the DAX. So we've got to get back above that previous support level. Could now easily become resistance. So 15,000 a critical level there. The CAC down 1%, and Japan was actually down 1.3%. So we're seeing that just hitting resistance there on the cloud. No big surprises. The Japanese using Ichimoku charts. We're seeing cloud resistance there. Cloud support on the long-term chart. Cloud resistance on the medium term. That's a feature. The Hang Seng was up 1.4%. And the Chinese index, tellingly up 2%, fell quite heavily on fears of sanctions and, of course, coronavirus fears in Shanghai. But we look to be just finding support on the long-term cloud. We're still bearish on that medium-term chart. We'll look at the energy mix in a minute. Oh, in fact, the Sensex in India was down, was up 1%. And that's looking a little bit better as well. Not quite yet above the cloud. And the Aussie market, actually quite a strong showing. Still the only market really that hasn't activated its downside target and upside targets there. The resource-laden Aussie market still looking pretty strong. We'll look at the energy mix in a minute. We've got coffee down slightly. Sugar is actually up 1%, so that's still looking pretty bullish there. And wheat is down, but of course it's easy to see that we've fallen heavily away from the spike high, but we are still a long way from where we were a year or so ago. So that will create inflationary pressures. We do have some downside targets. This new price action on the 60-minute chart will be significant, and that's what we need to watch now. If you're trading soft commodities, that's what you'll need to do. Looking at corn, that's also similarly fallen heavily away yesterday, recovering a bit today, but still at historically high levels. Gold sitting at 1921. It's short-term bearish at the moment. 1900 the pretty key level, but the long-term targets are still there. 2400 is the target that we have for gold. Silver looking strong as well. Palladium, where Russia has a very big impact on the metal with a third of global production, has been falling away this month after the initial fears receded. Copper is still looking very, very bullish, and again historically high, and US 10-year yields falling back below 2.4%. We did actually get as high as 2.5%, but the fact is this chart is a rising one as well, so yield prices quite high. All eyes on tech stocks now that we're seeing that strong recovery. Apple coming right the way back to test the January high, still lower than it was at the start of the year. And we've got a downside target and an upside target, and this will only play out if we move to new highs to deactivate that downside target. So it'll be very interesting to see whether Apple can actually do that. Looking at the energy mix, a lot of green on the screen this morning. Brent crude is up nearly 2%, not enough to take us back above the short-term bearishness. We've got good mini upside targets on the 1 minute chart. This is my daily 60 minute, 1 minute, medium term, short term, and very short term, i.e. today. If you're trading commodities, you need to look at these 1 minute charts. US nat gas actually has recovered a little bit, but it is just below the cloud there. And if we look at coal, sitting at 179.30, the key thing is coal needs to hold this 157 level. Emissions are lower this morning. We were neutral out to clients in our report this morning. We just feel this breakout is particularly weak, and we did have a downside target there. Looking at gas prices, we were bullish this morning on gas, and we're seeing here we're moving much, much higher there. Gas up quite sharply there, breaking above the cloud on the 60 minute for the first time in ages, so that's really significant. And the same with NBP, looking very strong there now, breaking above the cloud. We just interestingly test that resistance level, so that's going to be quite key. But the fact is we've moved back above the cloud. Looks like we found the higher floor. Of course, we're moving into expiry on the seasonal and monthly, but the fact is we are seeing a close above the cloud there. And looking at German power, up 6% this morning. This chart's still in a very strong uptrend. No clear signs there. That target there of 186 was given yesterday and met today. So that was given at 178. We're now at 186. You can't ignore these targets. And of course, we've got some bigger upside targets. Look out for our German power report as well. That's it for today. Until tomorrow, happy charting. See you then.